Hey everyone, it's Shelly Killinger here from the Shelly Killinger Group at RE/MAX CSI. So today we're talking about tax reform. I know you've probably heard the buzz in the media and that quite frankly there's a lot of confusion about what was proposed by President Trump and what was actually passed into law. And so there are three big issues that we feel relate most to real estate that we really just want to kind of clear the confusion on. So there are three major issues that we feel relate most to real estate. That is the capital gains tax, the mortgage interest deduction, and SALT, which is your state and local tax deduction. So we're going to talk about those three today. So before we dive in, we really do need to put this disclaimer out there that we love passing information along to you to clear some of this confusion and really help you make better decisions. But we are not tax preparers. We are not tax attorneys. So really to assess your situation best, you do need to consult your own individual tax preparer to figure out what course of action is best for you. So the first topic we want to talk about is the capital gains tax. So under the former tax framework, a typical homeowner would have to live in their home 2 out of the last 5 years, and they would be exempt from any capital gains tax if they would have to sell. What was proposed by President Trump was that homeowners would need to live in their homes 5 out of the last 8 years in order to be exempt from that tax. Now, obviously, people started to panic, thinking that this was going to have a negative impact on the real estate market, that people would avoid selling their homes in order to, avoid being taxed. Thankfully, when they passed everything into law, this particular item was not changed. So it actually remains the same, that if you live in your primary residence for 2 out of the last 5 years, that you would be exempt from a capital gains tax. So the second item that we want to talk about is the mortgage interest deduction. So under the old tax structure, homeowners were permitted to deduct mortgage interest on loans up to $1 million, and that included first and second homes. There was some concern that this mortgage interest deduction was going to be eliminated entirely. Thankfully, that did not happen. What was actually passed into law was that homeowners could deduct their mortgage interest up on loans up to $750,000. So if you have a loan that is under $750,000, you can still deduct that mortgage interest. You can also deduct the mortgage interest on a second home as long as the first and second mortgage added together does not exceed $750,000. So who does this affect most? It's going to be those who purchase a home with a mortgage that is greater than $750,000 but less than $1 million. Those are the people that would have, under the old tax framework, still been able to write off their mortgage interest. If you purchase a home above $1 million, even under the old tax code, you would not have been permitted to write off your mortgage interest. So the people that really this affects most are those that are purchasing between $750,000 and $1 million. The third item we want to talk about is SALT, the state and local tax deduction. So there was some concern that this would be completely eliminated, but thankfully that did not happen. So under the new tax framework, homeowners are permitted to write off their state and local taxes, which include their property taxes, up to a cap of $10,000. So who does this affect most? So the majority of people that are going to be affected are going to be in high tax areas, such as New York or Southern California or maybe Florida. They're going to see more of an impact because they're in a higher tax area. We're being told that 70% of Americans don't actually itemize their deductions, and in fact, the new tax law gives a higher standard deduction. So those people who do not itemize their deductions, they're going to end up with more money in their pocket because there's a higher standard deduction. So 7 out of 10 people, they're not going to feel an effect of this particular change in the tax law. So those are the three issues we wanted to discuss today, and I really hope that we've helped to clear some of the confusion that's out there regarding these three issues. Again, one of our core values is really to try to educate the consumer so that you can make better decisions, and I hope that we've done that today. So thank you guys so much for watching. I hope to see you next time. Please feel free to subscribe to our channel, follow us on social media, and comment and like our video down below.